Jerome Powell signals an imminent rate cut, but where will the Fed go from there? Welcome to Market Insight, I'm Elena Casas. Equity markets are celebrating after Fed Chair Jerome Powell said the time has come to cut interest rates. He told the Fed's Jackson Hole Symposium his confidence is growing that inflation is on a steady path down to 2%, and the greater risk now comes from the cooling labour market. Joining me now to talk about his remarks and more is Peter Andersen of Andersen Capital Management. Peter, hello. What did you make then of Powell's speech? Were you expecting him to be this dovish?
I think all of us have been so closely watching and anticipating what he was going to say that it was a pre-gone conclusion that he would probably signal that there would be a rate cut in the next meeting, yes.
Where are they going to go, though, after this meeting? What's your prediction?
I think that this is a very difficult position to be in right now because when we look at the data, the jobs numbers, and you recall that the jobs were actually revised sharply down, 30% off the past running one year. So when the Fed is making these decisions, he's really using a table that's kind of wobbly, isn't it? That it doesn't really give us the exact numbers. So he's really almost operating, I wouldn't say in the dark, but certainly in a dim room. So all this is major guesswork. We don't really like to admit that, but in reality, we're looking at moving targets. Anything could happen between now and the next meeting. So even though investors are very hopeful that he will make this cut, I would say there's still the potential that there may be no cut at all based on these next numbers that we get.
He did also say the Fed doesn't want to see and they wouldn't welcome more cooling in the labour market after that revision of the numbers that you mentioned. Is it possible then that the Fed is already behind the curve here?
I think so because, as I said, these are the only tools the Fed has, and they're certainly inexact. I mean, these numbers are surveys, human surveys used on landlines. So when you think of all that, we're really not caught up to the modern technology, and it's probably impossible to actually have any kind of exactness. So going forward, he's going to be using this, what I would call wobbly data, but that's all we have. And I would not be surprised, actually, to see maybe just one symbolic cut and then setting back. And I think there's a strong argument for just keeping the rates the way they are because everything is moving so well right now in the Fed's eyes. Maybe this is the equilibrium rate and we don't need to tinker with it anymore.
Markets, though, are anticipating a quarter-point cut at every meeting that is still to come this year, and they're soaring on those predictions. Do you think, then, that they're getting a bit carried away?
Listen, I always think that investors are so eager to try to convince the Fed that the Fed should be continuously cutting rates. And I'm smiling at that because I do think there's a little bit of immaturity in that expectation. And you are right. Most investors are anticipating 2, 3, 4 rate cuts in the coming months. I'm not in that camp. I think maybe one rate cut, sit back, see how this plays out, because we all know it takes at least 12 months for any activity that a Fed takes to actually work itself through the economy. So I'm all for just sitting back, maybe celebrating that we are at an equilibrium rate and watching and see how things go. I don't think there would be any damage to keeping the rates the way they are. And I am in a very minority camp of that view, I might add.
On another note, Peter, the likely biggest headline of next week will be Nvidia's results, which are out on Wednesday. Do you think the market will punish that company if they disappoint their very high expectations?
We are at a very, very vulnerable turning point right now with artificial intelligence. I think that investors are starting to hint very vaguely that they're growing impatient with this huge build out of AI and when are we going to see the results? So if there's any sensitivity about future revenues based on these large companies and their build out activities, if that revenue just is flat or even more so, slightly less, we could see a major sell-off, in my opinion, in artificial intelligence.
You yourself have reduced your position in that stock, haven't you?
I have sharply reduced the position, and as you know, I have firm sell triggers on these AI names, and one of the major sell triggers revolves around the prospect of deceleration of capital expenditures, and we are starting to get a hint that analysts are worried about that. That was one sell trigger, and then another sell trigger I call a better mousetrap, which simply means, are there other technologies out there that we may not be fully aware of that could compete more cheaply against NVIDIA's so-called graphics processing units? And there are indications, early indications, that there are other technologies out there that could be far more competitive and cheaper to use.
Peter Andersen, thank you so much for joining us. And that's your Market Insight. Don't forget, you can watch more videos on Reuters.com.